Kathy Vincent Inc. Comparative Balance Sheets for December 2012 and 2011. So you can see the cash, at the beginning of 2012 was $48,400. At the end, it was $80,800. So that's an increase. Cash went up by $32,400. And that's what we're going to explain here. Those activities that brought in cash exceeded those activities that cost cash by $32,400. So we start off down here with the income statement for the year. You can see that it made a profit of $154,580. Now, normally that would be cash in less cash out, but you'll notice two things. One, we have depreciation expense, and that does not involve cash, so we must add that back. So we add back $46,500. Well, and also we have a loss on the sale of plant assets. Now that's just a paper loss. It's not a real loss. It's just an accounting adjustment. So we must add that back. So we add that back, $7,500. And that's the cash we have from operations. You can see it's well over $200,000. Now we look at the other items from operations. Those are the current assets, and that's these three here, and the current liabilities, these two. These are operations. You'll notice that accounts receivable went from $38,000 to $87,800. So that's an increase of $49,800. And that is a use of cash. I increased my investment. Inventory went from $102,850 to $112,500. So I increased my investment in inventory by $9,650. And that too is a use of cash, so I bracketed it. Prepaid expenses was $26,000, and now it's $28,400. So that's another use of cash, $2,400. And I bracket that. Then I go down to the accounts payable. The accounts payable was $67,300 at the beginning of 2012 and $102,000 at the end of 2012. So that's a major increase in the accounts payable of $34,700. And that's a source of cash. Accounts payable represents goods and services that have been provided to us, help us earn our income, but we haven't paid for them yet. So somebody else has been financing that. So in a sense, that's a source of $34,700. Accrued payables, though, were $21,000, and they went down. So I did pay them down. And if I paid them down, then that is a use of cash. And in this case, it would be $4,500. And I bracket that. It's a use of cash. So that's from operations. I make those adjustments. Now I go to investment. Investment is simply plan assets. And we look at the other information down below. It says a new plant costing $100,000 was purchased for the year. And so you can see that we increased our investment by $100,000. And so therefore that is a cash outflow of $100,000. But I also purchased other investments, $29,000 as they said down below. And that is the difference between 109 here and 138. So purchase of long-term investments was another cash outflow, $29,000. But I sold the plant asset down here, so that's cash inflow of $1,500. And those three items represent the changes in investment. Finally, we have the changes in financing, and that's down here. Stock and bonds, or any long-term debt. So to begin with then, it said that we sold Common stock you can take a look at, went from 175 to 220. So that is a source, 45,000 source of funds. Payment of cash dividends that we said down here is a use of funds, 26,030. That's a use of funds. And the redemption of bonds. I reduced my bonds, it was 146 and went down to 110. And so that redemption in bonds is a $36,000 use of funds. Now we put this all together, and first of all the statement cash flow from operations, then cash flow from investing, and cash flow from financing. Cash in is unbracketed, cash out, the uses are bracketed, and hopefully we can explain the difference of 32.4. And here we have the statement. It's net income we've taken care of. So you can see that the total cash flows, 154 plus this, plus this, plus this, minus these, gives me cash flow from operation of 176,930. Cash flow from investing, this plus this, 129 minus 1,500. So I invested 127,500, so that was a use of cash. And lastly, cash flows from financing, sale of common stock, payment of dividends, cash out, redemption of bonds, cash out. So total, we have a cash out of 17,030. So cash in of 176,930, cash out of 127,500. Cash out of 17 gives me a total net increase in cash of 32.4, and that explains the difference between the cash at the beginning of the year and the cash at the end of the year.